Why are so many Canadians loyal to big banks when there are better options out there? For so many years, I stuck with a big bank like so many of you did. But when I took a closer look, what I discovered made me rethink everything. In this video, I'm going to share with you what I discovered, the changes that I made, and I'll share my personal experience with my big bank. If you're new to my channel, my name is Darren, and this channel was created to help beginners because guess what? 19 months ago, that was me. And in that time, I've created a portfolio that's worth $320,000. There's no magic here, folks, and nothing special. Now, what you can expect from the video, in the beginning, I'm going to share my portfolio. We'll buy some stocks. We'll see how it performs. Then you're going to see within that me growing my TFSA from zero to maxing it out, which is originally why I started the channel. And finally, we talk about the main subject, but in this case is the big banks. All right, so the portfolio is sitting at $167,713. And of course, this is with Wealthsimple, which is my primary broker. It's comprised of 4 separate accounts: my cash account, my TFSA, my RRSP, and the kids' RESP. So my cash account's sitting at $20,000. This is an emergency fund set up so that if something goes horribly wrong, we have some money. Right now we're earning 3.25% interest on this account. So for the month so far, we've earned $36. And in total, I've earned just over $1,200. Throw that in a compound calculator and see what that looks like long term. But it's not all great because the Bank of Canada just slashed rates again, and high interest accounts like this one are sensitive to the Bank of Canada's interest rates. So I just got an email telling me that they're going to be dropping that interest rate once again by 0.5%. So we'll have to consider what we might do with this money, looking at alternative options, because investing is about making smart decisions and not just sticking with one thing, which is also the main topic of this video when we talk about big banks. All right, looking at the kids' RESP, it's sitting at $78,556. Now, if you're new to the channel, this particular account is a robo account, so I do pay a fee, but because I am a premium member, I get a discount on that rate. If you want to learn more, check this video out that's popping up on the screen here. It talks about all the features of Wealthsimple and why I like it as my main broker. Now, my kids are going to be 18 in about 9 years or so, and by then you can see here that they'll have about $390. Now, I did do a video on RESPs. It's popping up on the screen, so you might want to check that out if you have kids and you're not sure what to do with your money. In my case, the biggest lesson I can pass on to you is don't just stick it into a regular account and have it grow, you know, like with the government grants that exist. That's definitely not the way to go. All right, so the net deposits in the account are $61,789. We make regular contributions every 2 weeks, and right now we've upped that from $100 to $105. The total returns on the account are $16,767, and the simple returns on this account are 21%. Now, going down into the activity tracker, which is one of the great features of Wealthsimple, we can see what's gone on since the last video that I posted. So in this case, we invested in ZFL. Of course, it's a robo account, so I don't do it. They actually do it for me. We had a number of deposits made into the account. Here's the management fee that was paid. It was $25.98 last month. And of course, we have these reoccurring deposits that come into the account and then get reinvested. All right, we're gonna jump into my RRSP, which currently I'm not making any contributions to. I had set this account up some time ago. So it's $20,344. The all-time returns on this account since I opened it up 19 months ago is $4,633, which is a 29% return. And I did use an asset allocation to set this particular one up. I did do a video on that. Go in the playlist and check it out if you want to see it. And here's a brief overview of the actual holdings that are within that account. All right, jumping into my TFSA, which is the star of the show. On the day, this account is down $24. Over the last week, this account is up $82. Over the last month, this account's up $1,254. Over the last month, it's up $2,940. Over the last year, it's up $7,269, and all-time returns on this account, $8,094. Having a consistent approach in your investing is one of the keys to making your accounts grow. I've been consistently adding money to this account since I opened it up, and that's why we're seeing the growth. We're looking to max this account out. Now, this account has stock lending on, which means that my stocks get loaned out to other people, and I get a small return in exchange for loaning them out. So you can see we have CNR, Plaza REIT, and REI that have been loaned out, and total earnings to date are $3.56. And the next payout will be next month in January. It comes in. All right, so the next thing we do is every 2 weeks I make regular contributions, and in this case it's $1,000. Being consistent with the amount of money that you put in the account is the most important thing. Select how much it can be. If you're brand new, it might be as little as $5. And if you're a little bit more advanced or you know how much money you can afford, it could be considerably more than that. In my case right now, it's $1,000, and I'm going to slowly start adding more to that position over time. So this time it's $1,001, and I'm going to continue to add to that over time. Now we're using Passive in order to track all of the activities throughout all of my accounts. If you're new and you're checking things out for the first time on my channel and you want to get started investing, check out my video description below. You'll find a link for both Wealthsimple, which is the main broker that I use, and you'll find a link for Passive. If you use those links to both set up and fund your account, you actually will get some money in your account to start investing right away. And in the case of Passive, you're going to save on some of the fees that are required to purchase Passive, but you'll also end up helping support my channel because I do get a small amount of money back for all the work that I put into making these videos. So if you do actually get something out of it, please check out those links and use them below. All right, so jumping into Passive, we are going to be purchasing a bunch of stocks, and I use Passive because it makes recommendations based on how much money we have in the account. So we're 94% accurate with our asset allocation. We're going to buy 1 share of CNR, we're going to buy 2 shares of REI, 1 share of VFV, 4 shares of VRE, 2 shares of XEC, 4 shares of XEF, and 7 shares of XEI, and finally 3 shares of XIC. Now the reason this is happening is because Passive will look at the amount of money deposited in the account, which in this case is $1,001.74. It breaks that up over all of the different holdings I have. And then of course, it bases it on the asset allocation that I've set up. So what percentage do I want to invest in each holding? So I'm going to go ahead and make those purchases, and then we'll jump into the next part of the video. All right, so now we're going to use Passive to look at the overall performance of this account. In this case, it's my TFSA. This is the main focus for me in my investing strategy right now, is to max out my TFSA, and I like Passive because it'll tell me everything I need to know about my account. Here we are looking at the overall performance, which includes all of the contributions since the account was open. That totals $45,831. We've contributed every single month, and we have a slow, steady increase in that. The net change in the account is $49,180 with a rate of return of 18%. This year has been pretty crazy. The first year I was investing, it wasn't quite like this. I bank on an average of anywhere from around that 5 to 6% mark. So this is actually really great. The investment growth to date, $3,349. And we can see a nice graph here that shows the growth of the account. Here's all the dividends to date. This is not an incredibly high dividend account. Some of the funds I'm in pay out every 6 months, and that gives me some international exposure. So you can see here in the graph what the breakdown of the various payouts are. The average monthly dividends on this account are $50. Not great, but again, it will continue to grow over time. And of course, then we have a bar graph showing which each security has paid in dividends. And the total dividends earned on this account are just over $1,000 to date. Now let's look at the monthly performance on the account. So we made net contributions of $1,028 in the month of December so far. The net change is $1,074. There is a negative return right now of 0.11%. The average monthly dividends in the month of December were $53, and the fees and commissions we paid are 0 because we're using Wealthsimple. And finally, the dividend income total for the month is $23. All right, so I went ahead and I bought all of the positions, and I had a little bit of money left over from those because as I'm purchasing, of course, the prices are changing real time because the markets are open today. And I actually want to add a little bit more whenever I can. We are getting towards the end of the year, so if there's some extra money kicking around, I take the position that I want to invest it whenever I can. So in this case, I went ahead and I added an extra share of VFV, which is the S&P 500. You can see here I bought 1 share, which was $154. So again, we're growing that account over time. All right, are you ready to take your banking to the next level? Because in today's video, I'm going to be sharing my personal journey with my big bank, which is the TD Bank, and the decisions that I've made most recently. And this isn't about saving money or fees or earning more interest. This is about making your money work smarter for you. Now stick with me to the end of this video because this will help you figure out whether a change is important in your banking. Now TD Bank is one of Canada's top banks. It's considered one of the top 5, offering everything from checking and savings accounts and mortgages and investment services. They've got an extensive branches and ATM network, and for some people that physical presence is comforting. Not only that, but they have a North American presence in the United States. So let's look at a little history lesson here. TD Bank was created in February 1st of 1955 through the merger of Bank of Toronto and the Dominion Bank. It is one of the big 5 banks, as I mentioned before. In 2021, according to Standards & Poor's, Toronto Dominion Bank was the largest bank in Canada by assets and by market capitalization. And in fact, it is the top 10th bank in North America and the top 23rd bank around the world. Clearly, TD Bank has some major roots in Canada and is a staple when it comes to banking. Of course, this creates a solid brand name for those looking at banks in Canada. Just like buying a car, people become loyal based on brand. But when we look under the hood, I think you might be a bit surprised about what you see. Let's start with my case. I've been a loyal customer of TD Bank since 1991, and everywhere we've moved, they've continued to be the branch and bank that we use. For us, the banking experience no longer really needs us to be in a branch. And in fact, every time we go to the branch, it becomes more of a hassle than it is helpful. I mean, I consider myself pretty savvy when it comes to online things, particularly with my banking, so other than the odd occasion every once in a while, I don't really need to go into the branch. And quite frankly, I can take care of some of those things over the phone as well. Now in our case, we have several accounts with them, which included our primary banking account, which was our select service account, our kids accounts, our mortgage, and more, which included, way back in April of 2023, my investing account. Now I opened that investing account, but quickly realized that by doing some research that I would be paying an enormous amount of fees, which is one of the reasons that we're talking about TD Bank today. All right, so let's examine this select service account so you get an appreciation for where I'm coming from when it comes to this account. So this account has a monthly fee of $29.95, we'll call that $30, and you have to maintain a minimum balance of $5,000. Full stop, hold on a minute. That's right, you have to maintain a balance of $5,000. Doesn't that mean that my money is working for the bank instead of for me? Now they do give you unlimited transactions, so there's no charges on any of that. You can go to the bank machine, you can send as many checks as you like. And of course, one of the biggest benefits is that you get the annual fee for the TD credit card for free, and we took advantage of that. This particular credit card allows us to build points up as we spend money on the credit card, and then we turn around and use that in any way possible, which in this case we primarily use for travel. Now, as I said, you can go to any ATM with this particular account. You can withdraw money from, say, Royal Bank or some other institution. You're not going to get charged for that. And as I said, there are no other hidden fees other than the one that I told you about. You get free personalized checks, the credit card that I told you about, and you even get a discount on an American account if that's something that you want. So after having this account for so long, I looked at some other alternatives. In this case, it was EQ Bank, and what I discovered was that it seemed like we were going to save some money, and we'll get into that in just a minute. So having discovered this, I decided to go approach the bank. So I went to the bank, I went into the branch, and I spoke to one of the tellers, and I explained to them the circumstances that I'd been with them for so long, which they could confirm, and that we had, been loyal to their branch for many, many years. And of course, through that loyalty, I asked if they would actually waive the fee for this. The bank teller had gone off, had a quick conversation, much similar to opposed to negotiating when you go buy a car. And when they came back, the answer was, no, we are sorry, we cannot do that. And of course, as a loyal customer for that many years, that was an incredibly big disappointment. But it also demonstrated to me that the bank is not really interested in looking after me. I've been looking after my own money instead of them helping me with it. And this was just another way that they could get a money grab by keeping all of our money. So think about that. If that money has been invested for long periods of time, it's earning the bank money. It's not earning me. And when I drop below the threshold of a $5,000, of course, I end up getting dinged with that $30. Now let's go through the math on that. So using a simple compound calculator on RateHub, we input the $300 in. We're going to pay that additional $30 every month, and we're going to use an interest rate of 5% because that's what I benchmark the returns for. And we're going to use 30 years. It could be a lot longer than that, but I think that's a reasonable number. Over that time, the total value of that money of $300, is going to turn into $26,308 with a total interest earned of $15,208. Now think about that. The bank was actually doing that and likely getting higher returns with that money. And when I approached them as a customer, they had no interest in waiving any of that. So why wouldn't I look at other alternatives? And all it took was a little bit of time and research on my part. And now I'm sharing that with you guys, so perhaps you can look at this and make some decisions. It doesn't mean that you have to decide on the things that I did, but it might steer you in the right direction. Now let's take this a step further. That $5,000, we put that into the same calculator. We're going to make the regular $30 contributions that I said that the bank account required me to pay if I drop below that $5,000. And of course, that would be on a monthly basis. We'll put in that 5% interest in the calculator, and then we'll figure things out. Of course, that turns into $47,306 in only 30 years with interest of $31,506. Again, it makes more sense if you can find an alternative, and that alternative can be found by you taking a little bit of time to research other institutions. The ones that I'm talking about today are not the only ones that are out there. There are plenty others, but for me, these are the ones that work. And taking things a little bit further, of course, savings accounts, with TD Bank, they offer 0.05% to 0.1%. I mean, that's negligible almost. It's barely any growth whatsoever. Here's an interesting quote that I read that I can really relate to. I love the convenience of having a branch nearby, but I hate how much I pay in fees every year. It feels like I'm penalized for wanting to use my own money. Sound familiar or resonate with you? Well, the bank that I chose to move to might be a good alternative, and as I said, that is EQ Bank, so let's go through EQ Bank's offer. EQ Bank is Canada's leading digital-only bank, and it's designed for people who want to save smarter and eliminate unnecessary fees. They've cut out physical branches, which allows them to save and offer the interest rates that they do. That means lower costs for them and more benefits for you. So, Savings Plus account earns 2.5% interest on everyday dollars in your account with no promotional periods, just consistent growth. So I've gone ahead in EQ Bank and created a joint account for my wife and I, which acts as our primary checking account, but it is also a hybrid account. So we earn interest on that money as it sits in that account, and currently that interest rate is sitting at 3.25%. Why is it higher than 2.5%? Because we deposit one of our checks into that account. So right now my check is deposited into Wealthsimple to take advantage of the interest rate on that side, and then my wife's check is deposited into EQ Bank, which allows us through our joint account to make the higher interest rate. So while our money is sitting in EQ Bank, it's earning interest. But if you look at the example I gave you from TD Bank, they are actually charging me to have my money in that account. The other thing is that they don't charge any fees. So all of the things I talked about with TD Bank that they said they offered because you pay this fee, EQ Bank offers all of the same stuff for no fees whatsoever. And of course, like I said, you have this all-in-one bank account, which acts as your checking account and your savings account. So I'm able to pay bills, send e-transfers, and do all of those things just like I could with my TD Bank. Now, one of the features that people love about EQ Bank is their partnership with Wise, which was formerly known as TransferWise for international money transfers. So if you send money abroad, whether it's to family, friends, or for business purposes, this could save you a fair bit of money. The low fees, EQ Bank charges a flat fee for these transfers, which is often significantly lower what traditional banks will charge. They also have a better exchange rate when you're moving money from one currency to another. They have fast transfers, which in most cases would be done within 1 to 2 business days. It's much faster than some other places that offer it at 5 to 7 days. Now here's a comparison sending $1,000 in Canadian to USD. With TD, they would charge you about $40 and they would offer a lower exchange rate, where with EQ Bank, that transfer would cost you $8 with a higher transfer rate. So as you can see, EQ Bank might be a fantastic option for you if you want to be able to make your money work better for you. So if you're tired of paying fees for the everyday banking, check out EQ Bank. You want to have your savings grow faster, and being an investor is not just about, following someone else blindly in their investing strategy. It's about making informed and smart decisions. And as you can see, I took some time to do some research on my own to make our money work better for us. And for us, EQ Bank ultimately was the best choice. And of course, that was all summed up when it comes to how easy it is to get things going. I did it from the comfort of my own home on my phone, and it didn't take very long, only about 15 minutes to get the initial account open, and actually was able to transfer all of the money from TD over to our EQ Bank account. The hardest part of this whole process was actually going back and forth to the bank with TD, and I did it more than once. As I told you, I originally approached them. I gave them an opportunity to waive the fee to keep me as a customer. They didn't want to do that. And ultimately, I went back on 2 separate occasions telling them that this was the final opportunity, and they just simply didn't seem to care. But I guess that shouldn't surprise me. They didn't become one of the biggest banks in Canada simply because they sat on their laurels. They actually took advantage of what I consider is the customer. And I feel like my money is going to work a lot better with EQ Bank. At the end of the day, banking should work for you and not the other way around. If you're ready to save some money or earn some more or simplify your banking finances, switching to EQ Bank could be the best financial decision that you make, or what other institution you decide works for you. Now that you've picked your bank and you have your money working for you, the next important step is to get your money invested in the stock market. And to help you with that, I created a video right here that will help you get started with a basic investing portfolio.